Glad to have you join us again on this edition of Capital Markets this weekend. Thank you so much for coming on board. I'm Temple Ashaju. Another MPC meeting is underway, and that's scheduled for next week, Monday and Tuesday. The Monetary Policy Committee of the Central Bank will be meeting to review major developments in the global and domestic space since its last meeting. The third meeting of the year is coming at a time when the global economy is viewed to be in a sweet spot following respite in global downside risks related to the U.S. elections, Brexit uncertainty, and the concerns of slower growth in China. The impact of the expectations of expansionary fiscal policy is evident in the bullish trend in the U.S. equities as well as a stronger dollar, yet expectations of an expansionary fiscal policy by the Trump administration has led to a rate hike by the U.S. Fed as well as expectation of further rate increases in 2017. Commodity prices have also remained strong since the last MPC meeting, while OPEC's May 25th meeting, which is also scheduled for sometimes next week, an oil production cut agreement should further support price at this level. On the program this evening, we'll be joined by a stockbroker who will share with us his thoughts and expectations from the meeting of the MPC, which is going to be holding next week, as well as the economic data which will be released by the National Bureau of Statistics. All of these will measure the impacts on the equities market, the bonds and T-bills market, all that connotes the Nigerian capital market. But let's now look at a couple of news feeds for the market this week, because we know generally that the market was very bullish, has been very bullish in the last 3 to 4 weeks now. But we'll take a look at some of the news that helped investors to shape this decision. And first on the radar is in a bid to improve Nigeria's ease of doing business, the federal government has announced plans to process all tourist and business visas within 2 days. The move, which follows the launch of an initiative in March to enable business executives apply for a visa online and collect it on arrival 48 hours later. The new strategy aims to exit Africa's largest economy from recession and will enable the issuance or rejection of such documents within 48 hours. Foreign executives had complained that obstructive embassy officials made it difficult to enter the country for business in the past. We'll take a look at poverty rates in Nigeria. Oxfam International has said that a combined wealth of 5 richest Nigerians put at $29.9 billion could end extreme poverty in the country. The statement is contained in the inequality report released on Wednesday. Oxfam says the benefits of Nigeria's economic growth is in the hands of a few at the expense of the man on the streets. The report indicates that 69% of Nigerians in the northeast now live below the poverty line compared to 49% in the southwest, stressing that economic inequality is the main reason for the conflict in the northeast region. And quickly, it's time for us to review the activities that we had in the market. We'll begin with the FMDQ OTC, where we have Nigerian debts there, and first on the radar is bonds. In a ton of fortunes for bonds market, performance this week was largely bearish as marginal upticks in yields were recorded on all trading days of the week. Activity levels stayed soft on the back of the increasing appetite for equities given the recent rally that ravaged the Nigerian stock exchange. Here we have 18th of March 2036 as a major security that pulled 29 deals from investors at 78.6% in terms of price, and the value of all that came in there is 4.30 billion naira. The March 2024 security also recorded some good deals, 6 deals there valued at 600 billion naira and put at 92.3%. In summary, there were 46 deals and generally totaled at 6.90 billion naira on that side of the market. And similarly, bearish sentiment filtered into the treasury bills market as lower liquidity levels pressured activity. Consequently, average yield rose on all trading sessions of the week. And at the start of the week, investors sold off short to medium tenured instruments in anticipation of higher rates at the primary market auction to be conducted on Wednesday. There you go, having the 9th of November 2017 bill, the 15th of March 2018 paper, as well as June 2017 paper, all recording those transactions found against the figures you have there. 17 billion naira, 14 billion naira for the 67th deals and 57th deals that we have against November 2017 and March 2018 papers there at those corresponding discounts, discounted numbers. But the total deals of all that was exchanged on T-bills yesterday is 324 and valued at 85.10 billion naira. Next is the NASD OTC. The little market in the capital market in Nigeria had its US side dropping 2.39% week on week as the market capitalization, that's the total market value of that platform, came in at 387.34 billion naira. We look at the volume, the value, and the trades that have been recorded on that platform in terms of year-to-date calculations, and it came in at 316.92 million for the volume. Value of all that has been exchanged there is put at 1.58 billion naira in terms of year-to-date, and in total, 1,091 deals have been carried out on that platform. For this week, we've got IGI PLC and Friesland Wamco as some of the major companies that investors took profit on this week. Now, the Nigerian Stock Exchange, the big boy. The equities markets closed lower for the first time in 4 weeks following profit-taking sell-offs in oil and gas and consumer goods sectors. The all-share index shed 0.28% this week to close at 28,113.38 points. The market capitalization closed at 9.71 trillion naira. However, analysts say fundamentally the market remains strong. Market breadth was positive with 30 gainers, topped by Mayhem Baker versus 28 losers, which was led by Air Service. Total volume traded declined by 30.24% to 2.27 billion shares and valued at 32.65 billion naira in 20,710 deals. Still with the capital markets, the equity side of markets, specifically coming off the 3 consecutive sessions of modest gains, momentum slowed on the Nigerian bourse at week close as persistent profits taken swept through the consumer goods stocks as well as depressed gains across the key sectors. Until now, the investors and exporters windows for foreign exchange had been the major motivator for investors to transact in the Nigerian equities market, coupled with the positive reports that we're beginning to see in the economy, the inflation reports, which is positive, the forecast that Nigeria is going to exit recession by the end of Q2. However, the MPC meeting, as I said earlier, is scheduled for next week, Monday and Tuesday. As said earlier, the National Bureau of Statistics as well is going to be reporting Q1 GDP data. These major indicators that investors employ to take decision. And if these unfold next week, the question is, how will the equity market react?